Will the virus affect your payments on account? Payments on account, they sound like a really technical bit of accounting and tax, and to some extent they are, but they are also very important. So that's why I want to look at them in this video. So payments on accounts, well, first of all, what do they relate to? So it's all your personal income. So your personal income is not your company profits, that is taxed as corporation tax, and that's completely separate. Your personal income is your dividend tax for money that you receive from your company. It's your trading, the tax on your trading, either through a partnership or a sole trade, and it's your property income. And payments on account kick in if you have tax payments in January that are over £1,000 or more than 20% of your total tax bill. So how do payments on account work? So if I was to start in trade in May 2020, just recently, just as we came out of lockdown, I started my business, then my first tax return would be to April 2021, and I'd have to file my tax return and pay my tax by January 2022. So you start in trade in May 2020, but you don't actually pay any tax until January 2022. And the revenue, you've noticed, that's a huge time lag. And the payments on account are not supposed to pay so that you pay in advance. It's so that you pay less in arrears, and so that your payments and when you earn the money are broadly in line. And that's what it's intended to achieve. So I want to go, because I'm an accountant, I like a spreadsheet. So I want to illustrate how it works on a spreadsheet. So if we look at the first spreadsheet, you've got your year-end 2021 and your year-end 2022. And in 2021, you've got tax payments of £5,000, and in 2022, profits are increased and you've got tax of £7,000. So how does that work through? So in 2022, in January 2022, you have your £5,000 tax payment for that year, but you've also got payments on account of £2,500. So you've got to pay some on account for the next year before you file that tax return. And your total tax bill is 18 months worth of tax, £7,500. And that's why people get caught out with payments on account, because you suddenly have to pay 18 months worth of tax when you haven't paid tax for ages since you started in business. So your first payment is £7,500, then you go into a 6 monthly cycle. So you make a payment at the end of July of another £2,500, which is just a guess. It's a half of your previous tax bill. And then it's all settled in January again with £2,000. So the £2,500 plus £2,500 plus £2,000 is £7,000, your total tax bill for 2022. And it's paid in three parts: half of last year's bill, and the balance. And then in January, you also pay the first payment on account for the following year. So you go into a pattern of making payments every 6 months. If your profits are equal, the same every year, you pay the same amount every 6 months. If your profits are increasing, then you will pay a little bit more in January because you've got to catch up, and your payments on account go up a little. So that's a simple payments on account. However, it's never as simple as that with tax, because what happens if something like a pandemic occurs and your profits vary? Now, so for very many clients of mine at the moment, their profits have either shrunk very substantially as a result of the events of the last few months, or they've actually increased because they've received a whole load of grants and actually they've been really busy, and they're actually busier than they've ever been before. So either your profits have gone down or they've gone up, but the variance in profits does weird stuff on your payments on account, and that's what I want to look at. So let's have a look at the second spreadsheet. So the second spreadsheet, I have to go to 4 years, because in order to do a proper spread of years, I have to do 4 years. So in 2019, we had a business where you paid, or a personal tax bill of £8,000. 2020, £10,000, and then the pandemic hits and your profits slump, and in 2021 you only have a £2,000 tax bill, and then in 2022 it goes back to normal and you've got a £12,000 tax bill. So what happens to the flow of money going from you to the revenue? Well, it had been going along nicely. You paid 4,000 in January 20, 4,000 again in July 2020, and then a balance of 2,000 plus 5,000 for next year, so 7,000 in January 2021. All normal. Again, in July 2021, you have another £5,000 tax bill. Obviously, it's a bit tight this because we've had this year and we didn't earn a lot of money this year. So the thing about payments on account is you can always appeal against them. So if you can't afford the payments on account and you think your tax bill is lower, you can appeal against it. But if you don't appeal, this is what happens, and your tax bill will be as I've illustrated in the spreadsheet. So back to the spreadsheet. So for 2020, you can see you've paid 4,000, 4,000, 2,000. In 2021, you're paying 5,000, 5,000 your payments on account. But then, because your tax bill is only £2,000, you get a refund of 8,000. So in January 2022, you've got an £8,000 refund, a small payment on account of £1,000. So you get a refund of £7,000. Hooray. Everybody thinks their accountants are amazing when you get refunds, so I'll be happy then. However, I know there's a problem. So in July 2022, you'll have another £1,000 to pay, not too bad, but of course you're earning profits, you're earning £12,000 of tax in that year, so you're getting behind with your tax. So in January 2023, you will then have a tax bill of £10,000 for the previous year, plus a payment on account of £6,000, a £16,000 tax bill. And a £16,000 tax bill will be a shock, or could be a shock if you don't know about this. And that's really what the aim of doing this video, because the payments on account do weird stuff. So what you're getting is normal payments, and then a refund, a big refund, and then a small payment, and then a huge payment. And actually sorting that out and making sure you've got the cash flow to match that becomes really tricky. So what can you do about it? Well, what can you do about it? The first thing is, like the government says, be alert. Be alert to this and know about it. So that's probably the most important thing, and 75% of the problem solved if you're alert. I think the other thing is just to make sure your tax returns are done really promptly, because then you've got the maximum amount of time to know what your tax bills are going to be. And I think that is an important part of the equation. So do those things, be aware of it, get your stuff done on time, and just make sure that if you do receive a big credit, you don't spend it on a holiday. You do just keep the money on one side. I think most sensible people do, but it just worries me. Okay. So anyway, this is payments on account. Payments accounts are a little bit of a quirk within the system, and they give weird results. And I think that it's important to highlight those to everybody. If you're new to the channel, then please consider subscribing. You'll be very welcome. And please press that like button because it really helps me. Thank you for watching, and I'll look forward to another video next week.